Good morning, everybody. Happy Wednesday. This is the morning show on Stock Market TV. I'm Spencer. We've got Steve. We've got JC. We've got Alfonso whipping up charts for us backstage. We have you in the chat. Good morning, Mary. Hey, it's Wednesday. Mary's coming on the show in an hour, give or take? Yeah. Before that, though, new guest today, Matt Warder. He's been a request of JC and Steve for, I don't know, 3-4 months at this point. We finally got him on. Today is the day. So I'm excited for that. I'm going to talk coal and talk commodities. It's going to be fun. If you're watching us on YouTube, do me a quick solid. Hit that thumbs up for me, please. And thank you. And I got nothing more to say. So let's just start the show.
Oh, Mr. Strazza, this head cut off today. What's going on, folks? I see not nice little quiet week, low volume week. Have we done the stats on in terms of volume? It's one of the quieter weeks of the year, right?
This week?
Yeah.
Huh. I don't know if I would have guessed.
I mean, the week before Christmas, the week after Christmas.
The week after Christmas, certainly.
Next week, too.
Next week, even lighter than this week. But just generally speaking, I think it's important to understand that, right? Because it's part of understanding the type of market environment we're in, which obviously is going to help dictate the type of decisions that we're making. We got a team meeting today. Very excited. I'll be in the car en route to the city today. City day.
What's your excuse to go to the city today?
I got things, I got things to do.
Halal food.
It's called sushi.
I actually do not have any sushi plans in New York City today, but I did it last time and I ended up getting sushi. So, you never know. Maybe I might get just a little snack, just a little, just to wet the beak a little. I don't know. Maybe we'll see what happens. I've been going to the city for fun a lot lately, more so than work, right? Which is cool. I'm going to the city for a Heat Knicks game next month, also for fun. Very excited about that. How about those New York Knickerbockers?
Hey, they're playing well. Don't jinx it.
The jinx is not actually like a thing, right? That's like witchcraft. I know you've been hanging out in the Caribbean a lot lately with these Haitians and all these voodoo people, but you know that jinx is not actually a thing, right?
You just can't be careful enough as a Knicks fan. Right.
Dude, my life as a Knicks fan has been a never-ending series of just
listen. The last time the Knicks were good was the last time the Dolphins were good, right? Early 70s.
I was telling Sam about this. I said I actually went to a Knicks game last year for the first time in like forever, and the last time I went was Linsanity.
Oh wow, that was a long time ago. That was a fun time, though. That was a fun time.
Yep, New York was on
Jeremy Lin was going to be the next Michael Jordan. That was fun.
I think it's been about that long for me too, Steve. I don't think I've been to Knicks game in quite some time.
Yeah. Insanity. Wow.
Exciting stuff. We'll see.
Yeah.
But Brunson and Randall are really good. So
why don't Randall sucks? First of all, he is what a disappointment that guy is. Can you Brunson's got some skills though. Can we talk about the market, please? Hit that bumper, please.
Do you want to do that? I don't know.
I would love to.
All right.
Fucking Knicks. Well, so yesterday we talked about the sentiment in the market and just the lack of excessive optimism that you would think we'd have in a market environment that is putting up some serious numbers this year. You run the year-to-date numbers, or you take them back to October. I mean, these are serious returns. People telling me we're in a bear market. I think that's information. We talked about that yesterday, so I don't want to dwell on that, but I do want to bring up the seasonal trends to kind of just reiterate where we are in the cycle. I think it's important to take a step back and just remember that anybody who's surprised by the behavior of the market this year, I guess, has not studied the history of markets, because it could not have been a more perfectly normal year for equities. You buy the midterm elections, right? Perfectly normal. rally in the first half of the pre-election year. Again, we saw all that. Third quarter correction of the pre-election year. You saw that. You buy in October and get yourself sober. That's exactly what we did. I don't know about that sober part though. I think I feel like I've been drinking more since October. And then you get that year-end rally. And obviously we've been seeing that. So, for me, it's not so much that the market is following these seasonal trends. I mean, there's no signal there. Like there's nothing unusual about that. It's actually perfectly normal. It's when the market ignores seasonal trends that I really want to pay attention. That's the signal. So obviously we should have some strength into year end and into January. If we don't get that, and you start to see underlying weakness in the market during that period, that's a heads up that something might be changing. But just normal seasonal strength, there's no signal there. So election year is supposed to be strong. I guess we'll see what happens. If you start to see deterioration and weakness in a seasonally strong period, that's a heads up. I'm looking for breadth deterioration, Strazza. I'm looking for new highs in indexes, fewer highs in stocks, right? Fewer stocks making new highs, new 20-day highs, new 60-day highs, right? Maybe even 52-week highs. You start to see the indexes making new highs, but you're not getting them confirmed by the internals. That's most likely a heads up that a correction is right around the corner. And that's what I'm watching for. And of course, some dollar strength. As we know, the negative correlation between the dollar and equities has been off the charts. So looking for breadth deterioration and some dollar strength, maybe even some strength out of consumer staples and low volatility stocks on a relative basis. Those are the things I'm watching out for. What about you?
The breadth improvement that we continue to see, especially down the cap scale, is just so constructive.
Yeah.
So you're talking about signs of breadth deterioration. This thing looks like it's just ramping up right now.
Well, no, that's exactly right. So what I'm looking for as a heads up for a market correction, we're seeing the exact opposite of those things, right?
I think it's a good list. I think it's a good list, right? And I think, JC, a big one would be if these next couple typically really strong weeks aren't really strong, right? Like
next month, the next real month and change, starting to see some weakness towards the back half of January again would be perfectly normal. You get that correction in February. That would make perfect sense. Maybe too much sense. Is it that simple? I don't know. I guess we'll see. But that's sort of what I'm looking for. I'm looking for that breadth deterioration. And to your point, we haven't seen that at all.
I would love to see just some little breathers in some of these really hot groups.
Like what?
Some little continuation patterns, some of the growthier stuff, a lot of the techie stuff. We've been running, yeah.
Yeah, I mean, you've seen some of that correction underneath the surface, though. So it's not like every stock's been absolutely ripping. You've seen some of these corrections. Some of them are just now starting to break out. Take a look at, I bought that Chewy yesterday during the show. You like that Chewy, huh, Strazza?
I wanted to buy some, and I got busy working, and then I looked back, and I saw that candle. I said, oh, boy, it was up like 10%.
Yeah.
Steve, that's my everyday. Yeah. I think of things I'd like to do, and then next thing I know, it's 2:00, and I'm like, I don't really get to it.
I put out orders, and then 4:00 comes on, and I never get back to managing those orders, and they all just expire. And so I didn't get filled. Oh well.
By the way, first time Chewy gets overbought in like a year and a quarter, year and a half.
What do you think about just the information from what you did? Like, you don't buy that chart in just any environment. You don't buy that setup in a lot of environments.
Love that setup, though. My third book is going to be about that setup.
Do you think that you can be more aggressive and take shots like this in charts that are not in uptrends?
No, you make a good point. I'm increasing the probabilities of success by behaving in such a manner in this particular environment versus, let's say, spring 22. Right?
It's a nice short interest there.
Great short interest. What's the beef with I had Jim Chanos trolling me last night about this trade because I was like, imagine imagine being short this name, and he tweeted at me, imagine being long.
Wow. Yeah, it's
From a certain point of view,
yeah,
you know?
Chanos, quite the cynic.
it's a
You
growthy
know,
one. I think that's part of that non-profitable tech group still. So,
listen, Chanos is allowed to troll me as much as he wants. You know, Chanos. I wouldn't be married to my wife if it wasn't for Jim Chanos, right? I mean, let's be serious.
imagine being short Carvana.
Imagine being short Carvana, and then
Uh,
Chanos's point. Imagine him being long that whole time.
a lot of people are, Steve.
Right. Well, that was my point with Chewy, right? The short interest is off the charts. So, like, man, if you're above those former lows in Chewy, we talked about it yesterday. I mean, whoo. I mean, that's a death wish, man.
So, somebody, I spend too much time on the financial, on the stock market subreddits. Somebody posted the other day about what's the term where you can like put your shares up for lending, right? Whatever those programs are at each broker. Somebody was getting paid whatever the borrow program is called, whatever. They were getting paid like 41% interest on their Beyond Meat to lend them out, and everyone was like, "Yeah, because you own Beyond Meat." Like that, it's not free money. You own Beyond Meat.
Oh yeah, you're paying. Throw up slide 2. I'm interested in like vegetables made out of meat. Right, that's what I'm interested in. When they start making carrots out of ribeyes, that's what, sign me up for that one.
Okay. The point is, it wasn't free money. It's like, yeah.
So this is the trade. I mean, what's the short interest? What was the final tally? I mean, we don't have the exact numbers. By the way, didn't you say they're changing the laws so that we get updated more frequently?
Oh man.
Didn't you tell me that, Strazza?
Yeah, they're trying. It hasn't happened. Spencer makes a good point though. Shorting some of these hard to borrow.
Dude, 26% of the float is short. Holy
shorting some of these hard to borrow names can be very expensive.
26%.
Right.
Wow.
But being on the other side and getting, paid the borrow fee isn't always so great either.
How high do you think this thing could go? Is this a double, Strazza?
What? Chewy?
Yeah.
Yeah, that little shelf, 30. I wasn't even thinking a double. But you never know, man. Once they get going, let them run.
So it hasn't been like every area of the growth spectrum, right? Like it hasn't taken everything with it yet, right? We still cannabis still weak.
Dude, cannabis is its own animal. Do not put cannabis in the growth space.
There's no information there.
No. The fact that pot stocks still suck is not evidence of risk aversion.
No, I didn't say it was. I'm just saying it does get lumped in.
No, it doesn't. There's a reason why
it gets lumped in by people like you.
There's a reason why cannabis stocks are not in the 2 to 100 universe. They're not stocks. And if it was backwards, they're that.
They should be consumer staples because no matter whether it's a strong environment or a recession, people are still going to smoke pot. You know what I mean? It should be a consumer staple.
Okay, fine. But I guess the question I was asking was, are there other areas of the growth spectrum
solar? What about solar?
Throw up
that haven't gone is what I'm asking.
Solar.
It started to.
Right, it started to. Right, and China.
Throw up the dashboard, Spencer. Check this out.
No, China and solar, right? That's probably right.
Solar's waking up. Solar's starting to work. They just had their best week in over a year.
Man, these things got slaughtered, bro.
Yeah. So they're all starting to catch up. See all this green on your screen?
I see a lot of green.
It's pretty much spread everywhere.
This is like Ireland, right? The hills out in the countryside.
And then how about Fonz, the one that shows that we circled, that shows them by S&P 400, 500, 600. Yeah.
I don't like that my dashboard idea yesterday in our meeting got shut down. I'm gonna keep pushing it on that. I have a vision of the dashboard. I'm gonna draw it out and send it to our developers. I have a vision.
So
no one said it was a bad idea. For the record.
I mean, we have it. It's just in Excel. So
I'm gonna draw it. It's gonna be dope. Wait till you see the dashboard that we got coming. It's gonna be so sick. These are the things I think about at night.
Yeah, look at this. So not only we're ranking them by relative strength here, short term, medium term, long term, and then we're doing it by size, right? So you have from left to right, large, mid, small caps. What you're seeing is massive, massive flows or outperformance or leadership shift down the cap scale. We've highlighted in red here for the S&P 400 and 600 sectors. It's materials, it's industrials, but it's also stuff like discretionary. So just like we talked about last week, JC was out. I wish you were here for this discussion. It doesn't have to be growth or value. If we're rotating a little bit out of mega cap growth, it could be rotating into small cap growth. Consumer discretionary, mid cap and small cap, these are the strongest groups right now, right? That's growth. There's a lot of
I had this guy telling me yesterday that small caps have been underperforming and small caps haven't been performing. And I was talking about how, small cap industrials, discretionary, technology, they have been working. And he was pushing back.
financials.
He was pushing back at me, saying that as a factor, small caps haven't been working. And it got me thinking. These factor people, it's not a factor thing; it's a sector rotation thing. And if you're only looking at the index of small caps,
Yeah, that's the
as
problem.
clearly this particular gentleman was, no wonder he's so confused because you're not getting all the information. He's like, it's a factor thing. I'm like, no, it's not. It's a sector thing.
Well, that's the problem, JC, right? Because when people typically say large caps, there is a momentum tilt if they're in large caps via a vehicle like SPY or QQQ. It's a
Yeah.
momentum strategy. You don't have that strategy with small caps where the strongest ones get so big that they dominate the index and drag it higher. So the Russell 2000 tends to have crap returns. If you go beneath the surface and buy the strongest small caps, right, and add some sort of momentum overlay yourself, it would be doing a lot better as a factor, I promise.
Dude,
These
these
stocks are really working beneath the
smokers have
surface.
been ripping. And if you're only looking at the index, which is full of biotechs and regional banks, then you're not getting the full picture because again, it's not a factor thing. It's very misleading, which obviously is why these people who are into the factors were so confused and just have just missed this. It was very obvious. It was all right in there. It's a function of sector rotation,
And the
not a function of breadth or factors or whatever. Sector rotation.
I think the mechanics of the indexes that are used is important too, though, right? You don't
Agreed, and
have
just understanding what's in these things.
if the best small caps have a great week, it's not really going to matter for the Russell 2000. If the best large caps have a killer week, you're going to see it in SPYs and Qs because they're going to drive the thing higher.
That's a great point. Blake asking whether Blake asking, Blake says, am I wasting my time looking at every chart in the S&P 500 every
No.
night, or should I just focus on the Dow and the trannies? Blake, I think every night's a little aggressive. It's a little aggressive. Yeah.
If you got the time, go for it.
Every night it's too much. Once a week. Once a week is the right number. I mean, every night, I think it's too noisy. I think you're getting less of the shock value if you're doing it every night than if you're doing it once a week. I like the once a week thing. I like the shock value of, wow, did you see China this week? Holy you know what I mean? As opposed to like an everyday drip of China, Like I like the shock, like, like in October when it's like, wow, emerging market currencies are ripping, or wow, Microsoft is ripping in a down tape, or wow, like that shock value. It's harder to get if you're doing it every day. He says, or should I just stick with the Dow and the trannies? Honestly, if you're going to do it every day, I would probably stick with the Dow and the trannies because it's 50 names. It'll take you 2 seconds. I don't have a problem with that. I mean, listen, if you really want to rip through 500 charts every night, knock yourself out, it's not what I would do. It's not what I would do. But I mean, if you really want to do a chart review every night, those 50 stocks, 30 Dow, 20 trannies, that's okay. I don't have a problem with that. Closing candlesticks. Right, Strazza?
I mean, I'm flipping through them all day. I'm looking mostly at individual stocks during the day.
Right, which I do as well, but like a structured, like, okay, put on some music and let's go.
Weekend. Saturday morning.
Yeah, Saturday mornings, man. Friday nights, if you're into that sort of thing, depending on what you got cooking, when When I lived in California, I was more of a Friday night guy than a Saturday morning guy.
Right.
You know.
Well, you have a family now.
And I live on the East Coast, so the times are, market doesn't close at 1 o'clock. It would be me and all the old people at the grocery store at 2 o'clock in the afternoon back in California. It was awesome.
I think there's going to be some shock value when we're looking through our international chart books pretty soon.
On the weeklies or the monthlies?
Probably the weeklies.
Why don't we do a quick little rundown? Dow futures down 60 points, about 17 basis points. S&P down the same, 8 handles, 17 basis points. Bond futures up again. 45 basis points on the 30-year bond futures. Gold flat, silver flat, copper flat. Oil up 1.5% today, up to $75 per barrel. Yen bouncing back today. Euro flat, so dollar mixed in today's action. Then, of course, volatility index is flat as yields are coming off. 10-year yield down to 3.9, just under 3.9%. And then, of course, in the old funny money, you got why am I not getting the data?
Bitcoin up, ETH up.
Wow, Bitcoin up 1,400 points to 43,600. Ethereum up 3% today, 22.45. Solana up 8% today, up towards 79. Shout out Strazza, been pounding the table there. Look at Injective Protocol up 16.5%. New all-time highs today. When you talk about relative strength in the equities market, relative strength in the crypto market is also a heads up. Imagine that. And then RNDR, also a fan favorite around here. RNDR up 7% today to around 4.5. So big moves in crypto.
I got to be honest. It's a little bit concerning how much this Mara and all these Bitcoin miners seem to be fan favorites. A lot of fans.
Well, when you have a stock,
Mara's trending.
Yeah, when you have a stock triple in a month,
dude, a lot of stocks are tripling. I'm sorry.
Are they?
They're not obsessed with the Carvana. They're obsessed with the Mara. Yes, there's something going on here.
How much is Carvana up in the last month?
We've been sharing plenty of charts that have doubled or tripled this year. It's not just.
I'm not talking about this year, bro. I'm talking about the last month and a half.
I don't know. A lot of stocks making big moves.
Dude, Mara does seem to be trending most days.
Carvana was at 7 2 months ago.
That's my point.
And now it's at 23. Yeah, of course. Price moves and sentiment follows. Like, why are you so surprised that people are talking about it? And it's not like it's like a consumer staple stock. It's a crypto. So not only are you getting a monster move and sentiment follows price, but now add a layer of laser eyes on top of that. So you're getting more craziness.
All I'm saying is I noticed that sentiment seems to be pretty hot for this one, and I was excited about it. And then I heard from everybody, and now I'm a lot less excited about it.
I guess, bro. I mean, I think you're overthinking it. I think you're overthinking it. Like, I don't know why you're surprised that a stock like this triples and now everyone's excited about it. Of course they're excited about it. That's how it works.
I don't know.
I think if you're above 19 and you're short, you're crazy.
Steve, are you going to let everyone else influence how you feel about it?
It's just things I pick up on over time.
It's observation.
It's the vibes. It's the vibes. I get it.
Listen. Not overthinking it, but it's not bullish when that many people are excited. I promise
you need bulls in bull markets, Strazza. You need bulls.
Some.
Listen, you're the one that likes to attract attention with your bull market shirts, right? So this is no different. Should we bring on Mr. Warder? Warder's in.
We can. Yeah, sure. He's here. He seems to be ready. So Matt, if you're ready, give me a thumbs up and we'll get you on. Okay. We have his charts too. He sent over a dozen charts.
This guy, a lot of good stuff. Talk about knowing your audience.
And yet these
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, look at this guy.
Hey. What's going on, boys? How's things?
Dude, Mr. Warder, man of many talents. He's not just a natural resource junkie. Also musician, athlete. What do you not do?
Former athlete. I definitely don't do anything athletic now in my old age, in my advanced age, but also heightened wisdom. No, not to do anything too strenuous, but no, it's sort of weird when you decide to become a commodities analyst, and I vertically integrated my way up from coal through iron ore and steel, and then wrote a letter with Rick Rule for a while and became a kind of commodities generalist. That kind of forces you to become kind of a macro generalist. And that kind of moves you into paying attention to what happens, not just to, other correlated sectors. I mean, consumer discretionary is a big component of downstream demand for steel.
Hold on. How come you're not angry though? Like these macro people tend to be very, very angry people. You're a happy fella. What's the difference here, you think?
Man, well, the difference is if you want to become a good forecaster, you have to realize that you don't know everything and you can't know everything. And when you get so married to your model that you don't pay attention to daily price action and update your views in a Bayesian sense, you're just going to be left out to dry. I mean, JC, you've been out here for 18 months saying this is a bull market. We bottomed in October. Consumer spending's going crazy. And look where we are. Look where we are, making new all-time highs in the SPY. You've been right the whole way. And, for me, like when we talked 18 months ago, I wasn't so sure that's where we were. But what happens is when you see that inflection point in terms of rate of change in spending, and the market usually tells you first, you better update your views real quick. So the way I sort of look at it is I have strong fundamental views, but I have to hold them really loosely because price is going to tell me what the future holds before I know myself. Does that make sense?
Sure does.
I just like that you're a happy macro guy,
Right.
I think it's, so these guys are just so angry. It's like, bro, cheer up,
They are. And, part of that is probably ideologically driven for me. Like, I think about macro as really just the sum total of what people are doing. And I love people. I love talking to people and seeing, whether they're stressed or whether they're, kind of happy to go out and spend economically. We have a lot of different stories playing out, at the consumer level in different areas of the country, and some of them are really good, and others are a little less so. But by and large, I mean, if you go try and hire somebody to work at your, a restaurant or your hotel, you're going to have to pay them, $20 an hour at this point. Notice how we're not talking about a $15 minimum wage anymore, because it's already there. The market did it for us.
Supply and demand is a beautiful thing, Matt. Let me ask you this. So when it comes to the energy trade, the coals, the uraniums, absolutely ripping, huge winners, but you're not seeing it in the oil and gas space. Where's the, why such a massive divergence?
I mean, really, it's a supply story, right? I mean,
Is it?
for oil and gas. Yeah.
Okay.
We're producing a whole heck of a lot of gas here domestically in the U.S. We're producing a whole lot of oil. I mean, there's a reason that OPEC keeps cutting, and that's because the U.S. is producing like gangbusters. And so you have to keep the market kind of reasonably tight to be in that, call it $70 to $80 range, maybe now 65 to 75. But I mean, the energy trade from an equity standpoint, those guys are still making money, hand over fist. Just from a rate of change perspective, 65 to 70 is worse than 85 or 90 last year. So on a year over year basis, the rate of change has flipped. That doesn't mean that 2025 won't be better. But I kind of, looking into next year, there's a lot of supply coming on. We have LNG terminals that come online in the back half of the year. We have pipelines that are coming on to supply them. And, the world is sort of awash in gas. So it's hard to get super bullish about utility driven coal until we see either a major uptick in demand or, alternately a cutback in supply, one of those two. Now, the rest of the energy complex, metals, materials, those sorts of things, there's not a lot of new supply. So that's why you're seeing that divergence between like the XME and the XLE, for instance. That makes sense?
Matt, why don't you talk a little bit about what's going on with steel and this buith? Big news yesterday with U.S. Steel. These stocks are looking up.
Yeah. So if you go through and you do just, a multiple valuation on U.S. Steel, most of the folks on Twitter who had, been following the equity for years, most particularly our friend at Yellow Lab Life, the koala, had said long ago that a proper valuation for U.S. Steel is probably in the 50 to 55 range.
As long as the koala said that I love how we could just talk like this and it's just like a perfectly normal conversation.
Twitter's
Well, the yellow
Twitter is a
koala
beautiful
was
place, my
absolutely
friend.
right about
That's right. Yeah, that's right. I mean, I thought it was pretty objective that we should see a higher offer than the mid 30s or upper 30s what the Cliffs offered for the material. They were taking down the blast furnace at Mon Valley Works in Pittsburgh. They're going to put up an EAF. They have the Big River Steel electric arc furnaces coming on. So you should have seen a proper like ESG re-rate of the steel company, and Nippon was the only one out there willing to pay for it. I guess we'll see if the Senate in Congress have anything to say about the ultimate approval of it. But considering that ArcelorMittal, an Indian company, just owned half of the U.S. blast furnace production capacity as little as 3 years ago, I don't see any reason why the deal won't go.
Hold on.
I was thinking, as somebody who knows nothing about all these antitrust stuff, sounds to me like it'll go through.
Hold on.
I think
You
so.
said ESG re-rate. I want to talk about exactly what that means, right? So if these companies are less dirty, they basically command a premium in terms of value.
Yeah, that's the market. The market is rewarding, cleaner companies. I'm gonna put that in air quotes, with higher multiples.
And does that make sense?
So you see,
do they make more money by being cleaner?
No,
Like,
no, not
they
at
could
all.
get included in more indexes, maybe.
And is it actually
They
cleaner?
can,
Is it actually cleaner, or is it one of these scams where like if you add like a woman to the board, or if you add like
are they greenwashing?
Yeah, are they greenwashing? Right.
That's a really good question. Of course, if you move from using blast furnace steel, which consumes coke, which releases carbon dioxide into the atmosphere, to an electric arc furnace, which just uses an electrical current to recycle steel, that part of the process is going to be, there's no carbon emissions with that. So you have a net negative there. That said, you're plugging that electric arc furnace facility, in this case, in Pittsburgh, into the PJM power grid, which is largely powered by Consol's thermal coal, which is right down the road. So you're increasing power demand that draws on thermal coal, which offsets a little bit of the green aspect of moving from blast furnace production to electric arc furnace production. So it's a mixed bag, if we're being honest.
And U.S. Steel has done a nice job at kind of cleaning things up this year.
Yeah, they really have. The big difference in my mind between U.S. Steel and Cliffs is Cliffs has all of these union liabilities that kind of weigh on their balance sheet, whereas U.S. Steel has done a really nice job of cleaning those up. I sort of expected ArcelorMittal to win this bid, and they didn't. ArcelorMittal got rid of all these liability burden balance sheets over to Cliffs, and if they would have come in and swooped up U.S. Steel, that would have been an absolute coup, like an absolute 180. Didn't work out that way, but I thought that would have been interesting from a karma standpoint.
All right, teach us some stuff about coal. Why do our stocks keep going up?
Sure. Well, at the top level, you have to think about it from a policy perspective. So, all these wise governments in the United States and Europe have said, well, we're not going to use coal anymore from a power plant perspective. So we're going to, shut down those plants. As a result, the mines that have supplied them have largely shut down as well over the past few years. But when you have a situation like, we had back in 2021, where either we're talking about the deep freeze in Texas or, the concern around gas prices in Europe, and then, fast forward to 2022 and the Russian Ukraine invasion, there wasn't the ability of those mines to ramp production back up because they closed, they're gone. So when you have that and you have a cost curve, an available supply that cannot meet demand, the spot price essentially becomes infinity, becomes whatever somebody's willing to pay for it. And we saw, thermal coal prices go to, several $100s a ton. Coking coal prices hit about $600. That is call it marginal ton supply dynamics playing out in real time. And if you look forward, like we're still not going to get a whole lot of new supply on the coal side. So whether we're talking about met or whether we're talking about thermal, demand continues to increase, not decrease, and supply is just is doing its best to stay flat. So I think we're an elevated price situation for a longer period of time, basically.
And it's the thermal coal names. Maybe throw up the thermal coal slide.
Throw up slide 2.
Well, it's really coking coal that's the one I think that's going to outperform here over the over the coming decade. Do we have those up?
Explain the difference for everybody. Thermal is for heat.
Hold on. Warder gave me a fun fact last time we were together. And your fun fact was that this used to be Walter Industries.
Walter Energy, yeah,
Dude, talk about like,
sure did.
this was from for kids these days. They don't know, Matt. They don't know the kids these
No, they
days.
don't.
This is from prior cycles. You guys were in diapers when we were trading, right?
That's right. That's right. Yeah. So Walter Energy had merged with a company called Western Canadian Coal, had a huge leverage balance sheet that blew up in their face when commodity prices collapsed back in 2015, 2016. And as a result, they went through bankruptcy, they cleaned off their debt, and they emerged as a, kind of a debt-free producer, which is now called Warrior Met Coal. It's basically the same leadership that was there before, back when it was Jim Walter Industries way back in the day. But now they have 2 mines, number 4 and number 7, which produce about 8 and 9 million tons of really nicely priced coking coal per year. They have another project that's coming on here starting, I think, in 25 called Blue Creek, which will also fetch a really nice price. The margin is going to be huge. So we have a situation over the next 4 or 5 years where they're growing, they're investing capital to grow production, and their margins are going to be just absolutely enormous. So, Warriors is one to watch here over the next little bit. Okay, so you got the publicly traded coking coal names up there. So this is just a slide that has general price, and you can see if we started 2020 and come till now, you just have this massive move up and to the right alongside price. But if you go to the next slide where I normalize them in terms of percentage gain, there's one that stands out, and that's my boys over at Alpha Metallurgical Resources, ticker AMR. They have the biggest screaming buyback on this.
And then that Warder's not even joking. I'm sure that they actually are his boys, and you hang out with them, and you guys talk about coking coal and have drinks. These are actually your boys, right?
But seriously,
they're good friends.
What are they doing different than the others? Because the outperformance here, not just against the broader market, but the outperformance against other coal stocks, which have been great, is kind of mind blowing. This one just keeps going higher.
It's the buyback. They committed very, very early on, once they eliminated their debt, to buying back, using it as much of their free cash flow as possible to buy back shares and decrease the float. And as a result, I think they've retired about 30 to 35% of their float thus far.
That's incredible.
And I mean, you can see what kind of torque it gives the company. I mean, from June 2022 all the way to June 2023, you had coking coal prices decline from $600 down to $225, and their stock just kind of stayed in this range, which was basically call it $130, $150 at the bottom to $200 at the top. And then once they chewed through a whole bunch of shares and the incremental sellers went away, I mean, it's just absolutely exploded. And now here recently, I was talking about, sector and factor correlations a little bit ago. Well, this is a mid-cap company in an economic environment where if you have high short interest and low float and you have an economic acceleration, those are almost always the stocks, the small and mid-cap stocks that rocket to the upside when you have this sort of move in a market. You've seen it in the IWM and a couple other indices. But AMR's buyback is really what's fueling it. And once the momentum algorithms pick it up, I mean, it just goes vertical. You can see what happens.
And so are they almost done with the buyback program? If they've already bought back a third, there's still more to go?
Nope. They will keep buying back until nobody will sell to them.
Wow, that's awesome.
At least, yeah. And in the meantime, they're doing a great job blocking and tackling, generating free cash flow. For them, an all-in cost out to the port is something probably $165, $160, $170, somewhere around in there. And it's hard for me to look forward and see a scenario where coking coal prices get meaningfully below $225 at the port for the foreseeable future. So this is a company that's a great management. They were one of my best clients when I worked at Wood Mackenzie years ago. Those guys, their chief commercial officer, Dan Horn, is the best damn met coal salesman on the planet. He's probably taught me more about markets than anybody else who works in the publicly traded space. So when I say those guys are best in class, they really are. We're in a hat as a result.
How important is that to you, Matt? Right, when you're doing your research, the management team or the leadership, especially at some of these natural resource companies.
Oh, it's everything, right? First off, you have to make sure that management is really aligned with labor. Alpha has kind of taken it upon themselves back when they had merged with Massey, talk about, a million years ago. This is more than a decade ago at this point in time. They invested a whole lot into a an operations management program called Running Right. And they've extended that culture even, through the bankruptcy in 2015, 2016. They've really kept that going. And now they have the ability to sort of produce, they're right about 16 million short tons a year. Their goal is to do that forever and to make for their employees. This is a place where you can come to work, in West Virginia, where I'm from, out of high school, go to work for them, make a really good salary, and retire there. That's what the goal is. And that's not something you see really often from management in the natural resources and industrial space. So, AMR, Consol, and now even Warrior, they had a union debacle that they moved past.
Okay.
I think you're going to see a very excellent shepherding of labor going forward.
So let's do Consol next, because I basically assumed that they were doing the same thing as AMR. So I figured they're both coking, right? But then I found out no, it's thermal.
Yeah.
But this one is the leader within its own space, big time.
Yes, exactly. Like you can see, here's the thermal coal space, by and large, also up and to the right. I mean, the coal sector in general outperformed Bitcoin at its peak by a factor of 2 to 1. So this gives you an idea about how much torque there was back during the COVID years. Now it's, not so much like that. These are more like kind of, grandpa stocks that are going to free cash flow and yield between, call it 15% at the low end to, if you have a really good year, 100, 125%. Year in, year out, forever. But the thermal coal price outlook is not quite as robust. I mentioned how I think 2024 is kind of a rocky road for energy. But Consol, if you want to move on to the next slide where we normalize it, Consol has this screaming buyback program on as well. And it has outperformed pretty much everything else. Hallador, which is kind of the next one down, was a penny stock back during COVID. So it ran up with thermal coal and it sort of got healthy. But thermal coal prices domestically in the U.S. are going down next year, and that's being reflected in Hallador's relative performance now. Whereas Consol's buyback that they have on is going to, much like I think like AMR, going to keep it in this pretty tight range up at the top of the chart there for a while until thermal coal prices as a whole rebound and begin to move higher. Probably, I think, middle to later end of the decade is when we should see something like that.
So it's not that they were doing something similar from a business perspective, just from a shareholder return policy.
Yeah, like AMR and CEIX have both committed to just using all of their free cash flow to buy back shares, as many shares as they can. And there's a investor, Monish Pabrai, I don't know if you follow him, but who values buybacks over everything. So he basically, took a 2 barbell approach and bought it, sold all of his tech holdings and bought into AMR on the coking coal side and CEIX on the thermal coal side. And he's going to ride those horses until they stop producing sometime, 40 years from now.
Can we move on from coal and talk about some metals?
Yeah, sure. Anything in particular you're interested in?
Copper above 4. These stocks in Latin America are going to rip, huh?
Yeah. So copper is pretty interesting, right? The issue there is also supply. There was one of First Quantum's mine in Panama, the Cobre mine, had its permit revoked. They had renegotiated their royalty, and there wound up being all these huge protests in Panama. If you follow Calvin Froge, who's the founder of Marhelm shipping data company on Twitter, I mean, he basically documented it firsthand and called that, this is absolutely going away. So it sure did. And if you pull up, First Quantum's stock chart, you can see right when that began to happen. But as a result, I mean, this is a significant piece of global supply. So if it's not going to produce, then the surplus inventories that the market had built are going to get depleted over time. And I think we're going to see prices per ton on the LME get back up above 10,000 pretty meaningfully this year, just because there's no, much like coal, like there's no other supply.
You throw up copper futures there, Spencer. Here's what I see. This is you tell a nice story. I don't know what the fuck you're talking about, but I will tell you that I see a massive range in copper futures throughout the back half of the 80s and into the 2000s. And then, that was sort of the range at that point in market history. And then, of course, we've had a massive range over the last, 15 years or so. And it was a sort of a regime priced above that prior regime. Would it be that far-fetched to think that maybe the next 10, 15 years are from like a 4 to 8, 4 to 10, sort of range? Is that too much? Is that unsustainable? Or do you think that there's logic behind that reasoning?
There's logic behind the reasoning strictly from a supply standpoint. What tends to happen when copper prices get really high is you'll start to see people talk about substitution with aluminum, and aluminum is going to be cheaper. Now, aluminum has its own peccadillos with regards to supply, but I think probably I don't want to call it an upper limit on copper. I think we're going to hit well above $4, probably $4.50, pushing $5 as we move on through the end of the year. But I do think you'll start to see some people throw up their hands and maybe think about substitution as we get to those higher price levels.
Yeah.
In the meantime, though, Freeport McMoran FCX is going to outperform Ivanhoe Mines, IVN.to on the Toronto Exchange, or IVPAF over the over-the-counter ticker. Another one of Robert Friedland's companies, Ivanhoe Electric, ticker IE. Those are companies to absolutely have in your back pocket going forward over the next year, because I do think you're right that this is going to rip back
something like this
all-time
order.
highs.
You see something like that, maybe.
Yep.
We kind of hang out up there now.
Mm-hmm. I think we can get to like 5 or 6, but we'll have to see. I think around 6 you'll probably see some resistance, just with regard to the physical supply.
What's that song? Moving on up to the side.
Yeah,
right.
But I forget what percentage that mine was of global supply, but I mean it's not insignificant, like 5-10%. You just can't go out to the market and find that again, So we're in a situation. Yeah,
you like Freeport as a vehicle for copper, though?
Of course.
I mean, that's the easy one.
Yeah,
right?
come on, Strazza. Of course you're not gonna like they move together.
Well, let's do precious metals before you go.
Yeah, well, Freeport also kind of a sneaky gold play too, so that's probably a good transition. I think probably 6% of Freeport's revenue, I think, comes from gold.
Is that all?
Like that.
That's all it is? I thought it was more than that.
I'll find out here in a second. I'll pull it up.
I mean, listen, I have no idea.
You've looked before, yeah.
But so precious metals are interesting too. And we after the Fed meeting last week, I mean, we have what the future is supposed to hold, and say what we want to about Powell. Pretty much what he said, he's done thus far. You can set your watch by it at that point. So now we're calling for, I guess, 3 rate cuts coming into the new year. I think that's the big reason why stocks are ripping too, JC. If we know that it's going to get easier in terms of financial conditions, the market's going to pull all that forward until they cry uncle.
The market's been telling us that for 18 months now. You mentioned it's not anything new, but hold on.
Exactly.
I getting back to precious metals, I have been very impressed at how resilient gold has been despite real yields ripping. Right now, of course, real yields are falling apart now, but while real yields were still right, gold was hanging in there. Right? Can you speak?
Because
what do you?
For 2 reasons. Number one, the dollar's ripping, so you have foreign countries actually buying gold to boost their currencies. So when the dollar goes up, by definition, other currencies mostly go down. Mostly the pound, the yen, the euro. So central bank purchases went way up, and that's hugely supportive in the market. And I think the uncertainty regarding, if we raise rates too fast, is that going to cripple the economy? Insert macro doom bear comment here. I think that sort of, mindset kept retail purchases pretty high as well. So it's been an interesting period. I agree with you to see a floor put under gold in that way. I pulled up Freeport's segments here, so let me look at gold metal recovery rate. It's like 5-6%, I think, of free cash flow.
Is palladium a precious metal or a base metal?
It's kind of a tweener. I mean, it's in the precious metals group, so I think technically we should probably include it. But obviously, most of the palladium goes to the auto industrial demand, goes to the auto industry.
Catalytic converters is my understanding.
Yeah, and so if you think about the rate of change of EV adoption in the auto industry, we went from, oh my God, everybody's going to buy an electric vehicle to like, oh crap, well, we can't really sell them, so maybe we ought to make some more internal combustion engine vehicles. That's kind of what the car manufacturers has done. if that's going to be the case going forward, we need more palladium, not less. We've seen kind of a reversal in it.
Dude,
Now I think
the
it's
COT positioning on palladium was off the charts, man. These commercial hedgers were loaded up. Speculators were super short. Now they're getting the squeeze, man. That thing's moving.
Yeah, it sure is. And I mean, if we're in an environment where interest rates are coming down, I mean, the correlation between palladium and platinum and interest rates is less strong than it is with gold and silver in particular. But it's not nothing. So they're going to move in empathy with the other members of the sector there. But I think, you know, if internal combustion engine vehicle demand outperforms relative to expectations, that's going to, you know, kind of be a surprise to the palladium market. And I kind of expect palladium to outperform platinum, you know, in that regard, going forward for a little bit.
That positioning was very aggressive. And it triggered.
I didn't really understand it, to be fair. I thought that was probably offsides. Like, why do you want to short at the lows? You know,
because that's what speculators tend to do, though. That's how it works, Matt. You see.
I know, but it just, like, I've had to learn the hard way not to do stupid stuff like that.
Well, we take advantage of that. We were buying Chewy yesterday. The short interest is off the charts. Like, how are you short Chewy? And same thing coming into the year. You know, you had all, you know, super high short interest in like Tesla, Carvana, like all these and they got squeezed. And it was the same thing. Like, how are you short? But that's, you know, the bet that we can consistently make is that humans are just going to continue to make poor choices. And, you know, betting on humans making poor choices is, you know, that's a good bet, man. That's a good bet. You know, so we're going to stick with that.
It is. I mean, high short interest relative to low short interest outperforming like 3-to-1 over the past month. More like 2-to-1. I think it's closer to even over the past 3. But really, I mean, since November, high short interest stocks have just ripped. You know, saw that Macy's deal that happened a little bit ago. The take private there. You saw Kohl's rip alongside it. There's another retail stock with about, you know, 20-25% short interest just ripped right alongside it. And you were talking about Carvana earlier. Everybody, you know, is short Carvana, but you can't be short these stocks in this environment right now. You cannot do it.
There's a time and a place, Matt. There's a time and a place.
Absolutely. I mean, you can look at that company and think it's, you know, going to zero in the next year or whatever. I mean, it might, but you can't short it now.
What do you like for Q1? What's the trade? What's the best trade on the sheets right now?
I mean, I think you're sort of on it. I mean, I think we're in this environment where if consumer spending is going to continue to at least, you know, hold flat or accelerate consumer, you know, PCE, then I think the, you know, tech's going to fare okay. Probably small caps over large caps. I think discretionary is going to do pretty well against small caps, probably relative to large caps. Tech, discretionary, commodities, specifically the industrial commodities. I think copper is going to do pretty well. Coking coals, I think, going to do pretty well come the springtime. Like those are the ones that I'm sort of looking at. And then I have kind of a base load of gold and a little bit of gold miners. I usually hate being long the miners just because they're going to have cost inflation like everybody else does. Although if you look at next year, if oil prices are going to be down, then the diesel component of their costs maybe relax a little bit. So maybe they catch a break too and surprise people to the upside.
What do you make of all this money in the money markets? 6 trillion, huh? What do you think? Fuel to the fire? It's coming out, going to the equities?
I would think so. I mean, I don't know if you're going to see it this year, but I would think that's what's going to fuel the fire once we hit January 2, right? And the market opens and things move to the upside. I'd be concerned to be short, you know, while that's happening. I think it's possible you could see, you know, a slowdown here later in the year. It's hard for me to say that's absolutely going to happen if we are indeed going to lower interest rates, you know, 3 notches next year. That's just, I'm going to wait and watch and see and be long. And if I'm wrong, so be it.
I like it.
That's a good plan.
We try, buddy.
Matt Warder, we've already got some requests to have you back again when you didn't even leave the first time yet, but we are getting requests to have you back when the calendar turns. So we'll do that. Thanks for coming on today. And, thanks for the conversation.
Man, my pleasure. Happy to hang out with you guys. Absolutely. Anytime. JC, Steve, good to see you. And Spence, we'll catch you here at a later time.
Adios. Matt Warder hanging out in the DGen spaces late at night. I've been dropping in every now and then on the late night DJ spaces.
I see you. I saw you last night.
Bunch of gloom and doomers. I gotta go in there and tell it like it is. You know how it is. Tell these motherfuckers to cheer up.
It's hard, man. Personal finance is personal. It's hard to cheer people up.
I guess, man. I don't know what everybody's so sad about. Like, dude, the world's never been a better place. Bull market. Like, what's the matter with these people?
I don't know. Fear sells. There's always reasons to be sad, but there's also more reasons to be happy. You just can choose. Moving on. Whatever. Okay. Let's talk. Let's talk some stuff
charts
here.
I got some charts.
You got some charts. Okay.
Let's talk about this Galaxy Digital now. So yesterday on here, saying how Mike Novogratz, right?
Yeah.
What's this guy been up to? What has he been doing? I haven't seen him on TV in a long time. This is what he's been up to. These guys are out here gobbling up distressed crypto assets. We need more people like Mike Novogratz, traditional Wall Street people in the crypto world. Okay. This guy knows what he's doing. They were picked by the FTX estate to basically take over and manage funds that were under management by FTX when they went bankrupt. You would think that wouldn't be very sticky money, or to eventually be redeemed due to the mess that went on there. They've tripled in size this year in their AUM. So I really like it. Nice base here. This is actually a $2.2 billion name too. Not bad. You can overlay it with Ethereum or Bitcoin or any of these crypto assets. It moves just like they do. What I like about it is the base is just now completing.
Throw the IPO index and overlay the IPO index on top of that. You know, there's so many charts that look just like this.
Yep. Taking out what? The August highs from last year.
Yeah.
So this one just looks like all the other ones that looked great and worked really well over.
And is there any dominant holding? Yeah, exactly. Look exactly the same. Is there any dominant holding in the Galaxy? Go back and forth a couple times just so you can see, like, literally.
Yeah, Steve. What are they known for besides?
Yeah, or is it super diversified and they just own a ton of shit?
No. That's a stock. It's not a fund.
I know, but it consists of a lot of holdings. Hence,
I don't
Galaxy Digital Holdings.
Like, is Galaxy? I feel like
I'm actually on their website right now.
Seems to me like they got a diversified.
Are they just known for Mike Novogratz going on TV a lot?
They're doing all sorts of different stuff, it seems. It's a digital asset and blockchain leader providing access to the growing digital economy.
Dylan says they own a ton of shit, so that's good enough for me.
They serve a diversified client base, including institutions, startups, qualified individuals. Since 2018, Galaxy is building a holistic financial platform spanning 3 complementary operating businesses: global markets, asset management, and digital infrastructure. I would imagine they're doing a lot of stuff on the market making side too. That's really what these companies.
Yeah, Dylan says they're a prime broker.
Yeah,
so.
yeah. I got a message here from a friend of ours saying that they will be a massive beneficiary of the ETFs because of the structure they have with coin. I don't know what that means. So some people are excited about some things that these guys are doing. I'm excited about the chart.
Speaking of ETFs, I think January 10th is the SEC's deadline for a decision. So, but 2-3 weeks away. Whatever. Anyway, tired of talking about that. You have any more charts, or can I do some news?
Yeah.
FedEx. Let's talk about FedEx.
Where's the bumper?
All right, fine.
Hit it.
FedEx down about 11% this morning on their earnings report after the close yesterday. Earnings per share came in below estimates. Not for nothing. It was $3.99 versus a $4.19 estimate. Sales also came in below estimates, $2.2 billion versus a $2.39 billion estimate. Their guidance was also light. The CFO said there was some seasonality to that, but this is typically a seasonally weak time of year for them. So they guided light on that front. They blamed lower volumes and fuel surcharges. And yeah, so weak guidance, weak earnings, and that is a recipe for stock being down 10, 11%. I think we have the chart here somewhere. Maybe we don't. What else? We had earnings as well from General Mills, I didn't look at the chart yet today, but I assume it's quiet because it's a staple, and these things don't move a whole lot. If you care about such things, EPS beat, sales miss. They revised their guidance, their top line guidance downward a little bit. So there was that. Oh, that chart looks not what I would have thought it looked like. I don't know. Interesting. Steve, I actually missed this yesterday. I don't know when this news came out on your Affirm favorite here. Did you see this headline that Affirm is expanding their options to include self-checkout with Walmart? Did you see that?
No. So Walmart's online store.
When you're at Walmart and you go to the self-checkout and you're doing the little kiosk thing,
not just online, you could do it at the kiosk.
Right, you can do it online or at the kiosk in store and say, "Hey, I'm buying $100 of groceries or whatever, and I want to spread this out over 4 months." If you want to do that, you can do that now.
This space is going to keep growing until it stops, right? You get that? Consumers aren't going to be like, "Oh no, never mind. I want to pay everything now," right? So I think you're going to see more and more of this. Again, the numbers from the Black Friday season were crazy in terms of how many people are using this. So,
yeah. What else did I have? That's actually kind of it. There's not, like we said, quiet week
news today.
This isn't so much news as it is trivia. I saw this actually the other day and forgot to bring it up. Does anyone want to guess how many pumpkin pies Costco sold in the 3 days before Thanksgiving? Anyone want to guess?
There's all these crazy stats, like Costco sells like 40% of the world's cashews. You always see this stuff about Costco.
It's always Costco. Costco sold 2.9 million pumpkin pies in the 3 days before Thanksgiving. If you expand that to include apple and pecan, they sold 4.2 million pies in 3 days.
Wow.
Americans are so fat. I love it.
All right. Here's
throw up slide 2, 3, and 4, just to kind of.
What do you have against pie, man?
On what's going on. What do I have against pie? I have nothing against pie. I think that key lime pie is underrated because Americans haven't actually had good key lime pie.
Steve has.
Oh yeah, because he lives in Key West. But most Americans, they're like, "Oh, I don't like key lime pie." Yeah, because you're eating shitty key lime pie.
A lot of these desserts are too heavy for me, and the key lime pie is nice. It's light.
And you go with a nice Hungarian Tokai, forget about it, man.
All right, I got one for you.
Look at this. Look at this. Hold on. Look at this. Next chart.
Yeah.
Next chart. Look at that. Nice and clean. Next chart. Woo! Costco for the win.
Do you like it when they clear the ranges with breakaway gaps like that? Do you like it as much as I do?
I like it. Sort of reiterates how important those levels are. Yeah, I like it a lot.
Okay, so I always think of JC when we're talking about big market caps because of that video we did on Apple years ago. Apple. Wedbush believes Apple will be the first $4 trillion market cap by the end of 2024. Wedbush analyst Dan Ives.
Is that 30% move?
Longtime Apple bull. I don't know. I'm reading. Believes Apple will be the first $4 trillion market cap by the end of 2024, given the pace of growth and monetization that the firm estimates for Cupertino over the next year. Lingering worries around iPhone, basically maintains outperform $250 price target. The first to 4.
Not the hottest take.
That means not Microsoft.
Not the hottest take. All right, trends be trending. Can we talk about how Costco's $300 billion market cap? Did you know it was that big?
Costco?
$300 billion?
That's a monster.
Wow.
Almost as big as Walmart, isn't it?
Yeah.
What's Walmart these days?
Walmart is 420.
417. Yeah, wow.
420.
Speaking of market cap, I didn't realize how close Berkshire was to catching Tesla. If and when that happens, does Tesla get booted out of the Magnificent Seven, or do we expand it?
Humans are too dumb to add Berkshire Hathaway into an important classification. Like For us, we treat Berkshire Hathaway as
Dude,
like as we do the S&P 500 or the
Wow.
NASDAQ 100, but humans are too dumb to realize that.
Berkshire Hathaway is in the Magnificent Seven. It is the Magnificent Seven, or Magnificent Seven. It's Apple now.
It is. Yeah.
It's
It's
Apple.
not
Or
Apple. What do you mean?
half
it's
Apple.
Overlay
It's half Apple.
Apple.
It's not
dude.
half Apple. Who
It's
said
like-
it's half Apple?
All right. The
It's literally half Apple.
their public portfolio is like 45% Apple.
Okay,
Yeah,
their public portfolio is less than 40% of their portfolio.
It's 50 something.
So how is Berkshire half Apple? That's just
all right,
bad
fine.
math.
20% Apple.
I think it's around 40%, 35% when you.
So it's
include
like
private.
17% Apple.
20.
You do realize the
Call
private
20.
investments are not that material compared to the public investments. We can go
They
check.
are. Their public investments is less than 40% of the portfolio.
No way.
Way.
I think you're wrong. I will check.
Speaking of
All
this,
right, come at me, bro. Come at me.
Speaking of this, I am making plans with my dad to go to the meeting next year because it coincides with his birthday. I've never been before. I'm trying to go. But
That's
throwing it
cool.
out there. So
That's cool.
yeah. Okay.
Strazza's trying to fact check me on Berkshire Hathaway Holdings. Just trust me, Strazza. Come on.
You're not right about that.
Yes, I am right.
Okay.
Thanks.
But what about my question about
What was your question?
I think Larry Thompson or someone on Twitter said the Elite Eight.
You know that none of these things are actually a thing.
Like
the
Larry
Fang,
and Austin Harrison
know,
for the Elite Eight.
Magnificent Seven. This is just bullshit that the media gives you to.
Yeah, I know. I'm having
it's
fun
not
with it.
actually a thing.
I know.
It doesn't exist. Like the S&P 493, that's not a thing. Never was. Still isn't.
You know there are exchange traded products named after Fang, right? They don't talk about Fang anymore.
Of course, because humans are dumb. Fang is an energy stock. Diamondback Energy. That's Fang.
That's also true.
Yes. And because humans are dumb, Wall Street is smart. So Wall Street is going to create vehicles for dumb humans.
So how soon till we get a Mag 7 product? Like first quarter?
The thing is, it takes a long time for these ETFs to actually get built and launched and everything like that. So as soon as it's launched, you probably want to short it against a long S&P trade and look for that underperformance. That's probably the move.
Okay.
Right?
I'm for it.
That's sort of how I look at that thing. It's not a thing. It's not a thing.
Should we bring on Mary?
Is that like telling you that the Easter Bunny doesn't exist?
No.
Spencer?
I'm not. I don't disagree with. I mean,
Wrestling is fake too, by the way.
it is
The Ultimate Warrior isn't winning anything.
It is a thing insofar as it is in the lexicon, but it is just the latest, right? You can go back 60 years, right? There's the Fang. Go all the way back to the Nifty 50, right? I mean, go all the way back.
No, the Nifty 50 is the thing.
No. The original Nifty 50 from the 60s or 70s, whenever that was. Yeah, right. Okay. I'm gonna bring Mary on.
Please.
This conversation is going nowhere.
Mm-hmm. Mary,
It's about
in the
20%.
house.
Good morning, guys.
Hey,
Hey.
Mary. It's about 20%. They have $1 trillion.
You're still on this. Nobody cares. JC was right all along.
That's what I said. I said, forget it.
JC was right.
It's still
Do
very
you want me
material.
just to leave and you guys can continue?
No, Mary,
It's a lot of
you're such a breath of fresh air. I have to deal with these two knuckleheads, and having someone like yourself here in the house, it is quite a pleasure. My pleasure, Mary.
Mary, what happened yesterday? Were you sitting behind me in my office? Were we trading the same thing? without
The
knowing?
craziest thing. Yeah. And I mean, this is not a stock that I'm watching like on a daily basis just because the market's been so fun. But I messaged Steve yesterday. We were talking about charts for today. And I said, hey, an interesting one I've got my eye on right now is BTU, ironically enough, after you guys talked coal this morning. And I said, if you put anchor a VWAP from November 22 high and then the May 23 low, you're getting a VWAP pinch there. And it's been trading in that range for several weeks. And so every time this has been coming down to that low VWAP, I've been buying. So it's a longer term position for me, but I'm really curious to see how this one resolves. And then Steve messages back that I'll let you continue.
Well, we were talking about it in the research chat just a few hours earlier. And yeah, I think it's resolving here today. Put on a little position yesterday. I didn't ask Matt about it because I know he doesn't love Peabody. But it's a trade.
There's nobody on planet Earth who consumes more of All-Star Charts content than Mary.
Super
so all
junkie.
the trades that you see Mary putting on are trades derived from ideas of ours, right? So I appreciate that, Mary. And it's very unique perspective because we're jaded because we see all the research because we're the ones doing it. And then you're consuming and sort of picking different things that are more suited to your objective. So I find, your perspective on our analysis and ideas, to be, fascinating, how you look at it. You choosing Peabody of all of the things that we're talking about. What else is on your radar? What else are you buying?
It's been a fun space to be playing around in here the last several weeks, just because, everything just seems to be going up. So I mentioned Hood last week, and that's still one that I am in and continuing to watch the resolution of this one. Last week, I mentioned how if you had anchored a VWAP from the July highs, we had just taken that out, and that's where I got involved. And we're coming right up against this resistance, and I'm not sure where we're at right now today. But, with crypto moving, Hood tends to move as well. And so, this has a huge base. And I think if it stays above this 1213, we are onto the races.
How many charts out there look exactly like this?
Right. I know. Yeah. And, that anchored VWAP from, thank you, Brian Shannon, for teaching me that a while ago. Anytime you anchor, I see this chart over and over and over and over again. And anytime we are taking out those July highs from the anchored VWAP, I'm getting in and making money off that trade. I can't count how many times I've made that trade now. I did it with Advanced Micro, AMD, and just a number of semis and a lot of these junkier type of names. It continues to be a pattern over and over again.
Yeah. So what Mary's basically describing is she's front running the move back up to the upper bounds of these bases in a lot of these.
Yep.
Right. So there's some sort of trend change that has occurred between July and then the October lows, and now where we're up and dropping a VWAP, in this case at the second red arrow, is giving you a really nice entry to then run it back to the base highs or the range highs.
Yeah.
And we're seeing them everywhere.
Yep. And I did that with crypto. We were talking about that with Mara several weeks back, doing that exact same maneuver. And I'd be curious to know your thoughts, all of you for that matter. It seems like, Mara is now taking out those July highs, whereas Riot seems like it has a catch up that could be made. They're not trading, at least last I checked. I haven't looked at the market yet this morning since open. But Riot's not at those July highs yet.
I don't know. I don't love the catch-up stuff. I think Mara is the cleaner and stronger one, and you don't want to overthink it. Riot looks messy. Look how clean this is.
It's so pretty. This has been such a fantastic trade.
No complaints here.
Nope.
We're happy about it.
real fast.
Big difference though. Like if you flip back to the Hood, which is just running in to this breakout level, and then you show something like Mara, which is took it out yesterday, following through nicely today. For Hood, this is more of a place where you want to take profits now, see how it acts at this level. If it's going to rip right through it, maybe, then get long again once the base is completed. This could take time. Mara, now the reason why we got so bullish on Mara just this week is the base is completed. It's a monster base. We're taking out the breakout level decisively, right, with some notable momentum. As long as we're above 19, I would rather buy weakness in this one now, back to 19. I'm not chasing this thing here.
Another one that I've been trading, I got involved with just a few days ago, was Carvana.
Another one that's completing a nice reversal.
Again, it's this
you're
chart
all
over
over
and
these.
over. I'm a junkie. You know that.
Mm-hmm.
So, but it's been fun, and so that's why it was a little bit awkward yesterday. I was messaging Steve about these charts, and he was helping me put them together. And then I mentioned BT, which just kind of seen such a juxtaposition to all the other names. Another one that I just got involved with, again, I've played this several times, Amazon, this, for a little bit longer term of a trade, but I'd been watching about that 145 level. I played it up to 145, took profits, and watched it consolidate there at that 145, and then bought right back in because it was holding so nicely. And so this one's, looking for this to head back up to all-time highs.
Amazon looks as good as any of the Mag 7s. I would throw Meta in that conversation too. Both of them making new highs.
Yeah, so lots of good things. Mentioned LRCX last week because it had just taken out our level there at 730, and this one continues to perform well and in a space that I particularly love to trade. So in the semis. So yeah, you guys, you put out such great research. Honestly, I've got a list of things that I want to go through today, and it's just I'm overwhelmed almost by trades just because that's the environment that we're in.
It's very wise of you, Mary, to recognize that there are overwhelming amount of trade ideas, overwhelming amount of trade ideas that are working, overwhelming amount of trade ideas hitting targets, setting up new trades. And very wise of you to recognize that that's actually perfectly normal for the type of market environment that we're in. It's a good catch. I feel like some people don't quite put those two together.
Which also brings up just an important point, which is that with participation expanding this way, there's so many charts that we want to buy. There does become some sort of strategy between picking which ones. You can't buy all of them. Like we're talking about, oh, look, another base, another base, another base. One good way to kind of weed out the ones that maybe you don't want to choose is you see that base completing on absolute terms, then throw up a ratio chart of the stock relative to whatever benchmark, use the S&P 500. You want to see a similar base completing relative to the broader market, which would indicate that we could expect the stock to lead or outperform over longer time frames.
That's good.
Right? So that's a good way to kind of set yourself up to be in a future leader. Let's look for similar reversal patterns on a relative basis. I'll get an example.
No, that's a great tip.
Pro tip.
Well, and that's where your research is so helpful to me because it does help narrow down on the stocks that have the most relative strength or showing the most relative strength. And so, you can pull up an ETF like financials, for example, and we have a whole list of things and that would take forever to go through. And you guys with the research do that for everyone. And for me, busy person that doesn't have time to do that myself, and puts together the stock ideas and the trade ideas based on that relative strength that you're seeing and saves me a ton of time. So thanks. I appreciate it.
Financials, these banks look like they're gearing up for another move. Huh?
This Key Corp, man. I mean, if you're not in it, we got in it already last week. If you're not in it, trains leaving the station. Choo choo, motherfuckers.
I wouldn't really suggest entering here.
I don't make suggestions. Everybody, we're all grown adults. You guys can do whatever you want. We're in. And we have our meeting today at 11, and we're going to talk about maybe adding to some of these positions, or at least I'm going to talk about it. I want to hear what Sean thinks.
I would like to get more short Lily and Mara Leaps. We got to talk about Mara Leaps.
Mara Leaps now?
I'm getting a lot of questions about Mara Leaps.
You're talking about how it's too extended and sentiment is too optimistic, and now you want to buy Leaps?
Be patient. On weakness.
You're talking out of two ends of your at. What is this?
Well, I'm not. No, I'm not. I want something high and tight here, and then I want to know what leaps I'm buying when that happens.
That's fair.
Just planning.
It sounds like you're asking for a lot. I want something high and tight. It's making new highs today, high and tight.
I'm not talking about buying the leaps here. I'm just talking about being prepared if we get a retest of this base breakout level. Why not?
There's no reason why not. I'm just saying, I think you're overthinking it. Like you're looking for a high and tight flag. Like we're making new highs still. Like, I think you're, I don't know. I think you're getting too cute.
I don't think so.
Well, you're listen, we're all grown adults. You're all entitled to do whatever it is you want, but I'm looking to add to bank positions. I love the fact that nobody owns banks. I love the fact that financials are making new highs. I love the fact that European banks are making new 52-week highs. Again, things you don't necessarily see in bear markets. I'm looking to add to these positions. They're working, and I think that you know, with volatility as cheap as it is, where's this damn VIX? This VIX is it 0 yet? This VIX is at 12, dude. This volatility is so cheap. We can go out. You want to talk about leaps? This is the type of environment where we can do that. I don't necessarily know that I want to do it in Mara, but maybe some of these bank stocks.
Yeah, look, Steve, if you're worried about too many people talking about Mara every day, stocks always trending. Can't say that about the banks, can you?
No.
Who's talking about those?
Nobody.
That's a good point.
Biotechs too.
Well, that's a whole different beat.
It's not. It's a small
there's so much
story.
idiosyncratic risk with those. I mean, that's a good
banks and biotechs, man. It's what small caps. It's the driver of small caps.
The bios are working.
Can we get a count? Can we get a count, Strazza? I want to know how many banks are in the Russell 2000, and I want to know how many biotechs.
We do this every quarter.
What's the number? How many biotechs are in the Russell 2000?
Bonds.
A lot.
What's the number?
We can pull it right now on Finbiz.
No.
Biotechs are the reason I have to have filters on my pre-market scanners, because every day there's a biotech or 3 up or down 40%.
Curtis likes the twist. The twist has been good. We're doing the twist out here. The twist has been great.
What twist?
Twist.
I can't. Yeah. There's too many bases, too little time. I can't tell you about every little one. You're gonna have to be okay with missing some.
All right, ready? The number is 251 biotechs in the Russell 2000.
I'll fact check you later.
I literally just looked it up. How many banks? Ready?
228. If Fonz just said 228.
Yeah, 228. Oh, it's in the chat.
That's a lot of
So a quarter of the entire index is banks and biotechs.
Banks and bios.
That's about right. That's kind of what I figured. A quarter of the entire index is banks and bios.
Wow.
Yeah, banks are on my list for today.
And then there's probably a huge drop off, right? For the third largest or third most well represented.
What do you think would be number 3? Industrials?
I couldn't venture an edge, I guess.
Probably industrials.
That'd be my guess.
There are 261 industrial stocks.
Oh, that's a lot.
Yeah. So that was a pretty good guess, huh?
That's larger than, you said 261?
Yeah, 261. There's also 261 technology stocks. So it's about the same.
All right. That's more than banks and bios. Okay. So what I'm learning here is that Russell's pretty evenly weighted among industries.
No. Because technology and industrials is at the sector level. So when banks and biotechs are specifically industry groups, so it's off the charts. Healthcare is 420 names are in healthcare.
Fair.
So, yeah.
That's good. All right. We've mentioned today, we mentioned this pretty much every Wednesday, our weekly meeting that we have on Wednesdays. This is a team meeting that is internal. We do open it up to a couple of people who are in our portfolio accelerator program. If you want to get access to our calls and actually listen in on them, this is where all the idea generation kind of happens for all the rest of the research and stuff that we do. They're every Wednesday. Like I said, internal, but open to a select few people. If you want to get access to the call, there's a couple ways to do that. First thing that I would say is to go to that link I put up on the screen right there. It's a little small, but I'll drop it in the chat. It's portfolioaccelerator.com/apply. And once you do that, you'll get a reach out from our own Mary, who can talk to you more about the program. We are right now, like every day as we speak, planning our first in-person event. It's like a month away. Shoot, I didn't realize it was that close. January 22nd, we'll be in New York. Again, this is only open to members of this program. We'll be in New York for 2 days, 2 nights, right? The 22nd to the 24th, doing 2 full days of content and education and discussions about all that we do and all the good, juicy market research that we have.
You know what we're doing? I spoke to the guys at the hotel. Instead of a presenter and then like an audience, it's going to be a U-shaped. So it'll be more of like kind of like a round table.
When I spoke to them yesterday, we called that classroom style. I think. Yeah.
Right, but it's a U.
Right. Yeah.
Yeah. I
Okay.
thought that was
Like college classroom style. Where yes. Okay.
Yeah, that's gonna be cool.
So there's the link. It's in the chat. It's on the screen. And for those of you in the program, we'll see you in I guess a little over an hour.
I will be in the car for our meeting on my way to
our weekly call. Should we do? Should we end the show with some recess as always?
I think we should.
Right.
Yeah, let's go. Ooh, can I go?
Please.
Coinbase. Throw up the chart, Fonz. So this is just a good example of what I'm talking about, right? It's one thing for the reversal to be in on an absolute basis, which is shown in the upper pane here. I even included a long-term moving average, right? Show that flattening out, curling higher beneath price, checks that absolute trend box. But at the same exact time, we got that breakout on absolute terms. Coinbase broke out to new multi-year highs versus the broader market, suggesting that this stock is poised to outperform more in the future. So that tells me, okay, this is a base that I like. Looks like, the kinds of bases that have been good to us, and I'm likely in a leader if I buy this base. So you could check both of those boxes, typically green light. What do you think, JC? Is it that simple?
It is. And for those of you, you're looking for a high and tight flag at Amera. Look at Uber. There's your high and tight flag.
So good. Yep, that's what I want from Mara, right at that breakout level.
You're already getting it in Uber, so I want to talk about Del Frisco's. I think it's underrated. Back in the day when I lived in New York City, this was like my go-to spot. If I wanted to take someone to a nice meal, whether business or somebody from out of town, their bone and ribeye off the charts. But this was back in the day. I'm way bougier now, like for sure. 5 years in California. I've traveled around the world more. Definitely bougier now. I went back to Del Frisco's a couple of weeks ago. Holy shit, this place is so good. It's better than I remember it.
You're a bougie boy.
I'm bougie. I've gotten bougier over the last 10 years, 12 years. I hadn't been there in a long time. Let me tell you something. This steakhouse on 6th Avenue and like 47th or 48th or something, it is official. It's official. This place.
They got the bone marrow. They got the bone marrow butter.
They don't have a bone marrow butter. They don't, but they do. The move is you get the bone-in ribeye, and then you get a side of Kobe, right? Because you get like maybe 4 or 5 ounces of Kobe beef on the side, and 6 ounces, something like that. And it's like butter in and of itself, so you can kind of go back and forth between the bone-in ribeye and the Kobe. Get a nice Bordeaux. Getting back to that funk. That left bank Bordeaux funk, the Italians, they do it funky, but that Brettanomyces coming out of that gravel soil in the left bank of Bordeaux.
Oh, the Brett, I know all about that.
Brettanomyces.
Mary, what do you got?
So last night I made Christmas cookies. It was the first Christmas cookies of the season. They're my favorite. The peanut butter blossoms with the Hershey Kiss on top. So
Wow.
JC, I need a wine pairing for tonight as I start to consume
Wait,
all of these cookies.
You got any peanut butter in there, or is it just chocolate?
Peanut butter with a little Hershey Kiss on top.
You need a toddy port. That's good. You got a 20-year-old toddy, you're good to go. You get that nuttiness from that aged toddy. That's what you're looking for. Don't go with a vintage port. Go toddy. Yep. I mean, if you want to go Madeira, if you really want to get cute, but you could just go full tawny.
I have a quick story about these cookies.
Oh, really?
I think most people know that there's peanut butter in these. This is a pretty common cookie.
He almost died.
I'm allergic to peanuts, so I never had these growing up. So I didn't know that this is like a common thing. I'd never seen them before until the first time I tried them at a Christmas party in like 2011 or something. Had no idea. Actually, it nearly did kill me. It was really bad, man. It was probably the worst reaction I've ever had. It was instant. It was instantaneous. It was like within seconds. I was like, "Oh shit, I'm in trouble." I had to go to the ER. The whole thing. And that was nice. I learned that this is a common cookie apparently.
Very common.
Everyone except for me knows there's peanut butter in them.
Wow, that's scary.
Well, we're glad you're okay. Thanks for ending the show on such a
man. It was that was scary. Not all reactions are scary. Some are just annoying. That one was actually kind of scary. So live and learn, right?
Wow.
Now Spencer travels with EpiPens in both pockets.
Yeah, usually, or my wife keeps it in her purse, and I try not to leave her side, right? So, yeah, okay, cool. That's a good place to end the show. Actually, I want to do. I'll save it for tomorrow. I'll save it for tomorrow. Thank you to our guest today, Matt Warder. Thanks to Mary for coming on as always every Wednesday. Thanks to all of you in the chat. Let's see. We mentioned the conference call in an hour for the Portfolio Accelerator program members. We got that. We got a hot corner at 2 o'clock. Not going to do what to fix today, I don't think, but a hot corner at 1 with Strazza. He's going to run through, take the whole universe of stocks with insider buying, and then run through all of those universe stocks, the charts he likes the best. And it's one of the favorite scans of ours and shows that we do. So check it out, 1 o'clock right here on the channel. And I think that's it. So that being said, everyone have a great day. Go make some money. And we'll see you guys later.
Adios.
Bye, guys.
Bye.
I can't take no loss. I don't even know what it costs. I hit the